This Good evening, everybody. We're going to get going here in just a minute. Just going to give everybody the chance to hop on in. It was a little bit late on the link. Sorry about that. I had a little bit of trouble with Discord for some reason. It didn't want to open on my computer, so that was kind of odd. What's up, Big Joe? You're always fired up. Yeah, a little difficult to find the link, or just how to find where it was in general. First time here. Okay. We can try and make it a little bit more clear. Hard to find in general. I think we have at least one video that'll show you around the server. Let's see here. Well, no, if it was a little hard, this video right here that I'll put in the chat might make it a bit easier for you to find your way around in the future. Joe made that, another one of our analysts, a couple weeks back, so it's pretty current. And it should give you a general overview of where all the things that you want to know are going to be located. So I'd recommend just checking that out just briefly, giving that a quick look. We're going to get started here in just a couple more minutes. Going to give everybody the chance to hop on in. Any other questions or comments before we get started? Oops. I'm going to send out another message letting everybody know we're getting started. Copy that, send that again. All right. How's everybody doing this evening? Having a good week so far? Bring this PowerPoint up from last week. We're going to start here from the beginning. Good week. All right, Joe, happy to hear it. We'll give it one more minute, then we'll get started, everybody. Any questions, comments before we get started? You guys are pretty quiet tonight. We have a little bit of a thinner crowd. I know I switched up the schedule on everybody. Normally I do Wednesdays, but this week I had a little bit of traveling going on outside, away from home, so I had to rearrange a bit for the week. Would have been a better week if you didn't buy into ISRG. Not familiar with ISRG. Let's take a look. Looks like it's doing pretty well. Unless you got in there yesterday. Generally, definitely a ripper, but yeah, I never heard of this one before. Pretty much one level that matters here, though. Oh, you got in at the high. Yeah, that'll do it to you. That is a bummer. Looks like they had a good report, gave it all back. Yeah, wouldn't be the first time that one's been done before. All right, well, it's a couple of minutes after the hour, so I don't want to keep everybody waiting. Let's get right into it for the evening. So, welcome into the lecture, everybody. A little bit of a thinner crowd tonight, so I apologize. Kind of switched the schedule around for this week, so maybe got some people off of what they're usually used to. But that said, last week we had a discussion regarding trading plans. So we talked all about creating trading rules, the ins and outs of kind of things to be including within trading plans, and we started to walk through creating some trading plans live towards the end of the lecture. And I'm going to start today by just kind of recapping some of the things that we talked about last week, really make sure that everybody remembers the content that we previously covered. And then we're going to move into a little bit more about position sizing, go through a couple real examples, walk through a couple trade plans. And this lecture, kind of like we used to on Thursdays, it's really going to be, I'll call it example and crowd focused. So I'm going to be really looking for your questions and specific examples that you guys want me to look through to really give you guys exactly what you want, especially because we have a thinner session today. It's the perfect time for you guys to get more individualized teaching and experiences and questions answered. So I want to try and lean into that really heavily. So certainly prepare your questions, prepare the things that you're interested in. I don't anticipate the topic that we have planned taking up the whole time for the night. So I want to make sure that if you guys have any questions, things that you want reviewed in specific, we'll go ahead and cover those as well. So starting off with what we covered last week. Again, last week the topic was trading plans. We talked a lot about why to use a trading plan. The big idea was really allowing you to enter the day every single day with a level mind. You're ready for trading during the day. And one final thing that I wanted to mention that I didn't cover last week is when you enter the market with kind of no plan and you're just hopping on right when the market opens and looking for that trade, it always ends up so much worse. And the reasoning behind that is because you're coming into the market just looking for anything you can. Whereas when you come into the day with a plan, you have a lot more focus, you have a lot more direction for the day, you know exactly where you should be looking and what you should be looking for. And it helps you really zone in on those specific setups and focus on exactly what you need to, rather than scanning across the market for anything and everything you can get. And that should be a pretty intuitive thing to be mindful of, considering the fact that I would say for most people, generally approaching their day-to-day lives, when you go into any day or any larger task with a plan, I'd like to think usually it goes much better than it would without one. So that said, another topic that we talked about last week was position sizing. So we talked about a couple examples on the benefits of having consistent position sizing. Just to kind of recap those benefits, we'll walk through this example really quick. Or no, this is stop loss. Sorry. So big pieces of trading plans are stop losses and profit targets. We covered those in detail last time, so I'm not going to spend too much time on the definition there. But really, position sizing is something that I didn't get the chance to drill home as much as I would have liked to. So that's obviously the title of the lecture tonight. So going to focus in on this topic just for a little bit here and talk about what consistent position sizing looks like. So when trading, generally speaking, most professional traders have some consistent set of rules or entry conditions that they look for in order to get into a trade. And this should make sense, right? You have to think algorithms generally are the ones that are executing trades. It's about 70% of trading activity is facilitated by algorithms. And all of those are completely automated based on a set of conditions. And you and I might not know exactly what a fund might be looking for in a given trade. However, whatever those conditions might be, they're going to program that algorithm to look for that time in and time out and continually search for those types of setups and those types of entries and trade based on that exact same setup. Now, obviously, people like you and I aren't going to be able to execute exactly like a robot, and that's completely reasonable. However, we should be trading with a similar mindset. We should be looking for repeatable setups that have a unique set of qualities that works well for the way we think about markets and the way we like to trade markets and the way we can manage our positions in financial markets. And all of those trades that you enter based on a defined trading system, you should be sizing consistently into those trades. And just to talk through that a little bit, and I can't remember if I have an example. No, I don't. Talking through consistent position sizing, it's something that so many people get caught up with, especially early in their trading, where their position sizing is all over the place and it just leads to significant consequences. And I'll talk through those. First, I'm going to take a step back. I know I've already spent probably way too much time talking in such a short amount of time, but taking a step back, what is position sizing? And we're looking at a couple examples of position sizing, but let's talk through this in words. So position sizing essentially defines the amount of money on average that you're going to be putting into every trade in the market. And you guys might be wondering, well, why does that matter? Well, if you think about it, let's say, for example, you take a set of 10 trades and you're taking those trades based on your repeatable trading strategy that's consistent and it's proven to be profitable. And let's say on 9 out of 10 of those trades, I put in, let's say, $1,000 per trade. And let's say, just based on coincidence, that every single one of those trades, I make 10%, right? So I took 9 trades, I put $1,000 into every trade, I made 10% on every single one of those trades. That means I make $900, right? Pretty simple. Let's say, for example, on the final trade, I put in $10,000, right? And this is a little bit of an aggressive example, but let's say on the final trade, I put in $10,000 and I lose 10%, right? So my stop loss is the exact same width as my profit target, which isn't best practice, but that's besides the point. And I lose $1,000 on that trade, right? Because I put in 10 grand, I'm losing 10%. Now, all of a sudden, all my profit from the previous 9 trades are completely wiped out, all because of my position sizing is just completely out of whack. There's no consistency, there's no standardization, but the trade was the exact same. So as you might be able to imagine, that's a significant problem. And I can almost guarantee that some people in here have experienced something like that before. Let me know in the chat, has anybody, can anybody think of a time where they got their position sizing out of whack? Maybe they had hit a couple good, nice trades, were on, maybe I'll call it a winning streak, decided to size up into the next one, took a significant loss and lost all the profit from the previous trades. Has anybody done something like that before? Can anybody think of an example where that's something that's happened to them? I know at least a couple people, yeah. Many times, absolutely, yeah. And there's nothing wrong with that, right? The reason that I'm posing that question is it's something that I've done. It's something that everybody's done. The problem with that, though, as you guys can imagine, is you're putting such a ridiculous amount of capital at risk that you're essentially wiping out all of the money that you lost before, and you're throwing your consistent trading system out of the window. The whole purpose of having a trading system where you can look at any given chart and say, I'll enter based on these conditions, right? Maybe we see, a gap higher, a cross back above the moving averages, a break above a key level, whatever it might be, right? Oh, wow. Satara lost. Wow, that's insane. 65 grand in NVIDIA. That is impressively large. I'll give it to you. Hopefully you have learned some lessons based on that, because that is certainly significant. That said, though, not having consistency in when you are position sizing, as everybody clearly can recognize at this point, is such a significant flaw in so many people's trading. So you might be asking, well, what's the way to fix that, right? We can identify that not having consistent position sizing is a significant issue. Here, what you can see on the screen is a couple of general, potentially rules of thumb for how to position size. So you can see I have a little bit of a sheet down below, which kind of governs what your sizing might look like based on your portfolio size, with just a different set of ratios when position sizing. Now, the importance of this, right? The big picture and the goal of consistent position sizing and having all the trading rules established that we talked about in the prior lecture is let's say, for example, and actually it might even be helpful for me to write this out. So let me write this out on another slide. Make a new slide here. Oh, that's a horrible color. All right. I didn't plan on doing this. So let's write this scenario out. So let's say, for example, let's talk about something that might be relatable to many people here. So let's start off with saying we have a $10,000 model portfolio, right? Let's say we have found some trading system that has a 60% win rate. And this is all hypothetical, right? This is all essentially to prove the benefits of everything that we've talked about over the past few weeks, right? So we have a 60% win rate in our trading system. So what this means is that 6 out of every 10 trades will be profitable. 4 out of 10 will be a loss, right? Keep it simple, right? Let's keep this very simple, right? Let's keep this very simple. Our target on every trade is 20% profit. I want to add a note that this, and this should be in red, this is not best practice. Profit targets should be based on the underlying equity, not just a fixed threshold. And this is something that so many people have issues with, is they say every trade they want to get 20%, right? The problem with that is it completely ignores what's going on with the stock, right? And what's going on with the actual trade that you're taking. Like, for example, that 20% price target might be incredibly unreasonable, and you're looking for that every trade. So you really need to adapt the profit target to every trade you're taking. But let's forget about that for now for the purposes of simplicity. And let's say our target on every trade is 20%. Let's say our stop loss on every trade, let me take off this disgusting highlight. Let's say stop loss on every trade is 10%, right? And this is the same story as above. This is not best practice. This is all for the purpose of modeling this situation. So on an example, 10 trades, sorry, it's getting a little bit detailed, but example, 10 trades, we would be making, let's have an example of 10 trades and a 10% position size, which means $1,000 in every trade, targeting 200 profit, 100 max loss. Before I continue, is this generally making sense? Is this scenario making sense so far to everybody? Okay. I'm trying to make it as clear as possible. I know it's probably a little bit weird with me typing this out as I'm saying it. So if you have any questions on, or confusion, just feel free to let me know and I'll clarify. Makes sense, but it seems impossible to build a $1,000 port that way. We'll get there, Josh. Don't worry. Don't worry. This is also a $10,000 port, so a little bit different, right? But we'll talk a little bit about different size portfolios and how you might have to adapt the rules, right? So here we have, thinking about an example, 10 trades. Let's highlight this. Oh, that looks terrible. That black. So 10 example trades. We're position sizing 10% of our portfolio, which means $1,000 in every trade. And our target would be $200 profit and $100 max loss. So per these statistics above, we're going to win on 6 trades and we're going to lose on 4 of them, which will give us a total profit of $800. Let's say, for example, hypothetically, we take 9 trades with this 10% position size, right? 9 trades with the 10% position size, and the last one is going to be a loss. So let's think about this. Example, 9 trades following same conditions as above, but the 10th trade is a loss. So before the 10th trade, we're going to have 1,000, or I think it's 900 total profit, right? Because we have 6 wins, which give us $1,200 total profit, and we have 3 losses, which give us 300 total losses, which gives us a $900 net profit. On the very last trade, we put our whole portfolio in, right? So we're throwing this 10% position size out the window. We put our whole portfolio in the trade. We have a 10% loss. All of a sudden, this profit turns into 100 total loss after full porting last trade and taking a loss, right? So we had these great rules, right? Where here, it was very simple. We are sizing very consistently into every trade. We weren't taking large gains, or excuse me, we weren't taking large losses. Where on the final piece of this, we were having a consistent trading activity, right? We were, this is oversimplified, obviously, but we are consistently trading a similar position size. Then all of a sudden, we decided to size up for whatever reason, and we took a loss on that, followed everything else the same. And yet that one mistake ruined all the profit from the last 9 trades and put us in the red. Obviously, we simplified this scenario very significantly, right? I simplified, how the target would work, how the stop loss would work, and I made it so the exact profit is exactly what we're getting every time. There's so many more variables in financial markets that are going to make this not really work. However, this is the big idea, right? Once you have this discipline, right, you're able to consistently trade the exact same way every single time, right? You're managing your positions the same way. You're looking for the same types of trades. You're consistently sizing into every trade. Where once you throw those rules out the window, things very clearly could go south very rapidly. And this is only an illustration of some of the things that I'm sure every single one of you has experienced in your own trading. What I am saying is not some tall tale that never happens. Every single one of you has done something like this before. I can almost guarantee it. Now, were you sizing consistently before you made this large trade? Maybe not. Were you consistently taking profits or consistently having a stop loss on every trade? Maybe not. Right? But the idea is the exact same. And this is where the problem truly lies, is you're giving up your rules for all of a sudden losing all your money that you made. And this just only makes the situation worse, because as humans, we take that one big loss and we want to make it back, then we size up larger, et cetera, and make the problem worse and worse. Good question from DT. Am I applying this rule to option trades? Yes. So this is the idea for really any type of trades, right? This type of philosophy where you're having consistent position sizing applies to every trade in financial markets, whether that's options, whether that's equity, whether that's futures. The idea is the exact same. Now, in specific, you're going to see this context applied to option trades much more frequently in this Discord group than equity trades. It's just generally what you see discussed more frequently. However, the concepts discussed in my lectures, in all of my lectures, and most other lectures that we have in this server are applicable to not only options, but also equities and futures trading. So the concepts are all the same, right? This is all about trading in financial markets. The mechanism of making those trades, though, just differs, right? So when we're talking about options, it just differs very slightly with, obviously, I guess the mechanism is significantly different, but the overall philosophy is generally the same. So really the point here that I'm trying to make is drill home the idea that having that consistent position size protects you from making decisions such as this, right? It protects you from getting yourself into situations where you're taking oversized losses, because really the simplest way to think about trading is what's called the trader's equation. And this is something that Al Brooks talks about a lot, who, if you guys aren't familiar, he's, probably 30, 40-year veteran day trader, one of the best that I've ever seen, somebody that I personally learned from. And this is something that Al Brooks talks about all the time, which is the trader's equation. And there's really 2 things that matter to traders when you're trading. It's your profits and your losses. And if your profits are larger than your losses, that creates a positive result to the trader's equation, which makes you profitable, right? Which, again, very simple, very simply put, but the idea is all there, right? That is the big picture, is ensuring, taking steps to verify and consistently obtain larger profits than losses. And again, I know it probably sounds really corny, and even me hearing myself talk, it makes me sound like I'm kind of selling you on some pyramid scheme, but this is really the idea that you need to focus on. You need to work towards these goals of having profits that are consistently larger than the losses that you take. And that is only attainable by having, number 1, a consistent set of trading rules. Number 2, a plan before every trade. And number 3, which is more important above all, following those trading rules and following that trading plan every single time you make decisions in financial markets. So that's the big idea. I'm sure there's questions on what I talked about so far. And obviously this doesn't explain specifically how to implement this. This is a really simple example. So I'm going to talk more about implementation, some tips, some tricks, some things that I do myself, and then we'll go from there. So we have a question from this downward chart who says, how do you control your emotions better? You're extremely up, but decided to increase position sizing and got burned. So very interesting question. And this is something that comes up a lot, right? How do I control my emotions? And the unfortunate answer is it is all under your control. You have to be the one that makes the decision to follow your rules. You have to be the one that makes the decision to create a plan before every trade, because ultimately you are the only person that can hold yourself accountable, right? Plain and simple. Nobody else is looking over your shoulder and judging to see if you're doing things correctly or if you are acting emotionally, right? We're not there sitting behind you to smack you across the face if you are behaving badly, right? Unfortunately, I'd love to be able to do that for everybody, but it's just not practical, right? It's not possible. So number one, it's going to come from within yourself. Now, a couple ways to kind of help yourself be more disciplined. I have a couple tips and tricks, right? Number one, the ways that I've helped myself manage my emotions and force myself into this is having a routine, right? So what that might look like is every single week, what I like to do, which honestly, I'm not going to lie, for the past multiple weeks, I have not been in a very good routine. I've been busy with other things outside of the market, and it's been kind of keeping me away in ways that I don't like. So just to be frank and honest with you guys there, I haven't been in a routine recently, but I also haven't been trading because of that. So I know since I'm not creating more trade plans, I've been taking a step back and I'm not trading because of that, right? I'm not planning my trades, so I don't deserve to trade. And that's something that's within me, right? If I am not planning trades out in advance and I am not studying markets and figuring out what I want to trade in advance, I don't trade, right? That's just it for me, right? So that's where I'm at right now is I haven't really planned a trade in a week or two. And as a result, I haven't taken a new trade, right? That's it. And that's something that's within me. I don't feel confident taking trades when I don't have the time to figure out what needs to happen before it does. Like you can even see, I don't have levels for stocks up here, right? I haven't even charted fresh levels for these areas. So I'm not prepared to currently trade. So as a result, I haven't been, right? I haven't been taking trades over the past 1 to 2 weeks. And that alone should be an example of discipline, right? And that's not to show that, oh, look how much better I am than the rest of you, right? But that just goes to show after, years of trading, you get to the point where I'm personally not comfortable trading if I don't have my plans ready because I have no idea what I'm going to do. Like I can look at any chart and say what I want to do, but I don't have that on paper. I don't have that somewhere where I can look back and refer to it, right? Having it on paper, having it written down, my plans that I'm looking to execute is so crucial for me because it gives me the structure that I need in order to execute with a level head. Now, this is something that works different for everybody, but me personally, I like a lot more structure. I like having my thoughts written down. I like knowing exactly what needs to happen in advance. So I have that plan ready to go. So that's number one is getting in a routine of planning and preparing for trading, right? And if you don't do that, you don't take trades. Simple, right? That's one rule. Number two tip that I have for following your rules and staying more disciplined is adding sticky notes to your trading setup. It's something that I talked about in the last lecture, and it's something I don't have any sticky notes on my monitors right now. But in the past, I have had sticky notes, which are just serve as reminders for me. Every time I hop on the computer to trade, I'm reminded of what I need to do. So one of the notes that I had in the past was swing the bat. And that was something that Shark taught me. And it was really because I wasn't executing trades. I was making plans, but I wasn't acting on them, which is a pretty big problem, right? I'm spending all the time to make a nice plan, then I don't do anything about it. So that was my problem like 2 years ago. So I had to put that sticky note on my monitor, swing the bat, right? As a reminder that I need to get it together and start making decisions based on my plans. So that's number two, right? Number one is having that discipline and that structure to review charts, to plan your trades out. Number two, having those reminders on your monitor, right? Writing out things that you need to be mindful of, I've always found is very useful. The final tip, though, is completely outside of trading, and it's being disciplined in other aspects of your life. I've personally found that when I have structure in other parts of my life, whether that's being on a consistent schedule where I wake up at the same time every day, or being on a consistent schedule of going to the gym a couple days a week, right? That personally, I've always found my trading improve when I have solid routines in other aspects of my life. And I can't necessarily say that there's a direct correlation, but for everybody, but at least in my life, that's how it's worked, right? So this might be something that you won't hear other places, but having routines outside of trading makes you better at having routines inside of trading, right? Because following rules and sticking to a set of things to follow in financial markets is always going to be difficult, right? There's money involved, there's more emotions involved than most other aspects of your daily life. So it's hard, but you're never going to be able to follow a set of rules in trading if you can't do it outside of trading. So that's another big tip I have is do your best to get in routines outside of markets, whether that's waking up at the same time every day, going to bed at the same time, eating, 3 meals a day if that's something that you want to work on, or getting in the gym every day or some days a week, or any other habit, right? Whether you like, you want to walk every day, or just building other habits outside of markets helps you build habits inside of markets, because I'd like to think that doing things outside of markets are a lot easier for the most part, right? At least when you're getting started. So those are my 3 tips. Hope that helps. You guys think about this topic a little bit differently, but I get it, right? It's very easy to set up a common position size or tell yourself that you always want to be in a trade without a plan. One final tip that I have is writing down a checklist. What do you need before you get into every trade? So what would the first box look like? Let's write out a checklist together, right? Let's do it right now. Let's go through this exercise. Let's write out a checklist, right? And this is one that you can start with. So this checklist, I will not take a trade unless I check all these boxes. Do I have a trade plan? Right? That's the first step. Is my trade plan reasonable and complete? Right? Do I have profit targets, stop loss, and an entry? Right? Is my trade plan high quality? Am I forcing this trade? Or does it meet the criteria for a high quality setup? Right? First 2 questions, right? All of these are going to facilitate us getting in a good trade. Do I have a plan? If no, I do nothing, right? Is my plan reasonable, right? Is it done? Do I know where I'm going to enter? Do I know where I'm going to sell? Is the trade high quality, right? Is this a high quality setup? Is this something that I routinely look for in financial markets? Or is this something that's totally out of left field, right? Next, let's get into the emotional side of things. Am I in a stable mental state? Am I tired, angry, upset, stressed about other things? If the answer to this is no, you have no business trading. You have no business trading. This is a good question, Jay. How can you make these decisions when actually live? 100%, right? How could you possibly evaluate all these, in an instant? Well, that might be something that you need to consider, right? Are you rushing into trades to the point where you don't have time to make plans? Are you rushing into trades where you're so angry that you don't care what you do, right? This might be a reason for you to slow down a little bit and be patient, right? Be patient and make sure you get a high quality entry, and make sure that you take the time to make the trade plan before you enter, right? If you're worried about missing the trade, you're probably not in a stable mental state, right? If you're worried about missing it, you're thinking about something else. You're thinking about something that you shouldn't be, right? If you think you're going to miss the trade, you need to take a step back and relax and be patient, right? If you miss a trade, so what? There's going to be 1,000 other this month, right? Who cares if you miss one trade? It's not the end of the world. So if you're worried about missing it, you need to take a step back and think about, okay, what's going on here? Are you in a stable mental state, right? Finally, let's see. What do we cover here? So we have trade plan ready. Trade plan is high quality. Are you ready to execute? Will taking this trade, let's say, am I prepared to follow my trading rules? And this could look like anything. Insert rules here. This could be examples. Let's talk about some examples. Position size, obey my plan. One of my rules that I talk about sometimes is never take more than 3 losses in a day. So taken less than 3 losses today. That's one for me in specific. That doesn't necessarily need to be your rule, but I found that helps me stay out of financial markets when I don't belong in them. Usually 3 losses. If I'm taking 3 losses in a day, I'm either trading poorly or I'm trading too much. It's one of the two, and I need to stop. This is pretty simple. This is pretty simple. This can be a checklist for you all to start. Before you take a trade, answer all these questions. And if the answer is not yes, you shouldn't be in the trade. This will force you to be honest with yourself and follow a given set of rules. And if you decide to lie on this checklist, well, I can't help you anymore, right? I can't help you with that. I can give you the structure. I can give you what you need, but I can't make you follow it. You have to do that yourself. So if you're struggling with following a set of rules, if you're struggling with over trading, if you're struggling with getting impatient, give yourself a checklist like this to slow down your thinking, make you think objectively about your mental state and what you're going to take a trade in. Because going back to this, how you are currently feeling is more important than pretty much anything else, right? If you're feeling, greed, fearful, it doesn't matter what you put on the chart, you're not going to execute well. You're going to do something wrong. It doesn't matter how good your analysis is. You could see the future for a year, but if the whole time you're impatient, if the whole time you're freaked out, it doesn't matter what the hell information you have, right? So these are really the most important questions to ask yourself. Is there anything wrong with how you're feeling? Are you stressed about something else in life, right? Are you feeling like you are forced to make money today or forced to trade? And are you going to follow your rules? We just wrote this on the fly. I personally think this is pretty good. I think this is a good place to start. So something to be mindful of. Another thing that I suggest, right? You should have a quality or something that you should be using, some kind of system that you should be looking for, a checklist in every trade, right? I totally butchered that sentence. That was all over the place. Let me rephrase. For every time you take a trade, you should be looking for a set of conditions that is sound and logical and justifiable. What I mean by that is you should be getting in a trade because of logical reasoning. For example, some of those reasons might be maybe I'm looking for support at a moving average. Maybe I'm looking for one moving average to be above or below another. Maybe I'm looking for price to be above a significant resistance level. Maybe I'm looking for price to be in a given trend, right? So let's define that too. Let's define that too. And I'll define this with you all right now for myself. This is what I'm looking for. Generally, I want to see a trend in the direction that I am taking a trade in. So either a trend or trend reversal in the direction I am trading. I want to see positive, or I'll say short-term EMAs agree with larger, I'll say with direction of trade. If long, 9 EMA above 20 EMA. If short, 9 EMA under 20 EMA. Ideally, key support sitting nearby. If long, I'll write it long focused. Well, because I really don't trade short right now. So we'll just talk about long focused. So short-term EMAs agree with, I'll say uptrend or trend reversal on higher time frames, weekly / daily. uptrend or trend reversal on lower time frames, confirmed by EMAs. 9 EMA over 20 EMA. Strong support is nearby. This could be weekly POC, daily POC, significant MA, key price action level. I mean, this is really the big idea. That's it. Ideally, volume gap is above. Volume price analysis agrees with uptrend. High volume on moves higher. Low volume on moves lower. This is the big idea for me, right? So everybody, if I came up to you and asked you, what do you look for to get into a trade? You should be able to rattle off a list just like I did. You should be able to tell me what you look for when you get into a trade. And this is when I'm like buying support. If I'm looking for a break higher, I'd be looking for high volume buyers through key level on breakout. Every trade I take should have these qualities. Every time I take a trade, I should be prepared to answer the checklist. These are 2 ways to make yourself accountable, right? We have a trading execution checklist and high quality setup checklist, we'll call it. I just came up with those names on the fly. So if somebody has any better ideas, feel free. Do these ideas make sense? Are you guys understanding how the structure can be helpful? I mean, think about other aspects of your life, right? This can't be the first time that you've heard about these concepts in principle, and it might be framed in a different way than what you're used to. However, this is not a new idea. This is not something unique to trading, right? Think about, man, I mean, I don't know. Think about when you're purchasing something online. I always revert to this example. Think about when you're purchasing something online and you want to deem if it's a high quality item that you need and it's safe, right? Well, okay, think about a high quality item purchase checklist, right? The price is right or negotiable, right? It's located nearby to you or can be shipped. I don't know. It's the color you want. I don't know, right? That's something that's automatic in your head when you want to buy something online, right? It's what you want at a good price. It's in a model that you want. Let's think about a car, right? The price is right. It's the model that you want. It's, yeah, exactly. The tires look good. There's no mechanical issues, right? That's a high quality car purchase checklist, right? The car dealership doesn't seem like a scammer, right? Then are you ready to execute that checklist? Well, do you have a plan for what you're going to do at the dealership? How are you going to negotiate? What's your plan? What's your target, right? Is it reasonable to ask for that price on the car, right? Is the car that you're looking to buy high quality? So does it meet all these items on the checklist? Are you mentally stable? Are you buying this car on emotion? Are you buying this car because you're jealous because your sister got the same car? And are you a pair? Yeah, exactly, Errol. So this idea of being prepared for something there's nothing unique about it, right? And in other aspects of your life, the difference is it's just automatic. It's already something that you do and you don't think about it. And that's what trading will eventually end up being for you. In the future, you're just going to look at a chart. You're going to see if it meets the criteria or not. Then you're going to be ready to trade. You're going to automatically make the trade plan. You know it's going to be good, so you don't have to worry about this. And I mean, they might always be useful to ask you, but still, right? You're going to make the trade plan automatically only on high quality setups, right? So it's all going to be intuition, but you have to practice. You have to look at charts. You have to study. You have to determine the things that work for you when trading, right? What type of setups do you like trading? What type of setups agree with your mentality? What type of trades agree with the way you think about markets? Because me personally, right? You'll see people like River and Flips, scalping. Me personally, I can't do that, right? I don't think that quick. I like swing trading or day trading because I have more time to think. I have more time to plan. I have more time to execute. When I don't have all that time, I just make bad decisions. So I don't really scalp, right? And I want to get better at it. I do, but swing trading and day trading works for me. So I just focus on that, right? I'm not concerned. How are we feeling about these ideas? I know we kind of got off track from the position sizing, but I really don't even know how we started talking about this, to be honest. I always kind of find myself doing this type of stuff. But this is the big idea. And I'll share these checklists in my tab tonight so you guys can refer to this. But every single one of you, if I came up to you on the street and asked you, what do you look for in a trade? You should be prepared to tell me exactly what you want. If you just say, oh, I don't know, I just look to see if it's going up and if somebody on Reddit says to buy it. What? What are you talking about? Right? It's just ridiculous, right? And it doesn't need to be all technical focused, right? And I don't want that to be a misconception, right? Everything that I look for is generally technical, right? But there's times where I don't always look for something technical and I'll look for something fundamental. One of my best trades actually last year was based on partially fundamentals. It was getting long on AT&T down here, and part of the reason I got long was because the share price, or excuse me, the stock was valued at what they hold in cash. So the stock down here was valued at I don't know, some amount of billions, and they held that in cash. And I was like, well, this is pretty obvious, right? I mean, I'm literally purchasing a share of what they have in cash, right? So, well, it's like a no-brainer. It's at a massive technical level on top of that. So it doesn't always need to be technical, right? Is what I'm trying to say. These are all things that are technical, but there's times where I look for things that aren't these qualities, right? There's sometimes different things that I look for, but having some kind of checklist is very important. So that's really the big idea of what I wanted to cover tonight. We got a couple questions. Josh said, can we go over positioning on smaller ports? And I do want to touch on that. So when you're trading with a smaller portfolio, it is definitely harder to position size consistently, right? If you're position sizing with 5 or 3% of a small port, it's hard, right? I can't disagree. It is not easy. So when you're trading with a smaller amount of money, you have to be comfortable with a bit more risk. Just plain and simple, right? You have to be prepared to risk more of your portfolio on every trade. That might be risking 20% of your portfolio on every trade. However, just because you're putting that amount of money in the trade doesn't mean that's where your stop loss should be, right? So just because you're putting 20% of your portfolio in the trade doesn't mean you can lose 20% of your portfolio on any trade. If you lose really more than 5% of your portfolio in any trade, you're doing something wrong unless you're trading with really this amount of money. I get it. It's hard. I don't disagree with that. But Josh, what I'll say is you can still have position sizing rules, but you need to be prepared to have generally larger position sizes. Unfortunately, if you're trading with $500, your position sizes are probably going to be $100 minimum, right? That's the minimum. That's 20% minimum, right? So it's harder. I get that. And you do have to be able to accept that. You have to be able to mentally say, okay, I'm trading with 20% of my portfolio. You need to be conscientious of where that stop loss is going to be. You really want to focus on trades that are high quality. And you don't need to be trading things like SPX with a small port. You really don't need to be doing that. You can trade plenty of other stocks that are not weeklies. For example, this is something that River pounds the table on all the time, is something like T, right? You look at T, you can get a contract at the money with a month's time for $22, right? This got 22 days till expiration. It's $22. You can buy 10 of these in a $500 port, and it's, 40% of your port. It's a lot, but it's a whole lot safer than an SPX 0 DTE. So you have to remember that you don't need to be an idiot and just get dailies or same days, because that's the only thing that's cheaper, right? Josh, it depends, right? Focusing on the amount of contracts you buy, it's difficult, right? So you need to be mindful of the dollar amount generally, right? So the number of contracts is less important than the dollar amount. I'll just leave it at that. Jay, it's pretty hard with 3-day trades a week. You are not limited to 3-day trades a week. You should switch to a cash account and you will no longer be limited to 3-day trades a week. The reason that you're limited to 3 day trades a week is you are trading on a margin account, and that will limit you to 3 day trades every 5 business days. So if you're on Robinhood, you could switch your Robinhood to a cash account. If you're on anything else, you probably started with the cash account, so you probably wouldn't have margin. So switch to a cash account. Plain and simple, you will not be limited on the amount of trades that you take. Yeah, quality stocks for a small port. Absolutely. So T is one of them. River talks about T literally probably at least 4 times a week. And it's pretty simple to trade. It's doesn't move too quick. There's nothing really that happens that's too shocking. I mean, look at how nicely it bounced off that level right there. I mean, previous swing highs, it came right back into it. Nice bounce off it, right? Previous swing high right here, came right into it, couldn't hold above it, right back down. So generally speaking, it's not too shockingly volatile based on, yeah, it's very, very slow in terms of how it trades, which makes it great for people that are new because you can get contracts that are cheap. Some other good ones. Ford used to be pretty good. That one's been a little bit more tough recently. I mean, been a little bit messier there on Ford. Coke is another good one. KO, real slow mover, and it's really just this group of boomer stocks that I'll call T, KO, and Ford. These ones move real slow, and the contracts are really cheap, so it's generally not super risky. Also, right, you don't necessarily just need to trade things like this, right? You could trade Apple, right? Apple, something like Apple. You look at Apple's next week contracts, you could probably buy one, maybe well, the 200 is a little far, but I mean, the 197.5 call is 25% of $1,000 port. You buy one of them, right? It's expensive, but it's not cost prohibitive. Now, if you're trading with a $500 port, maybe that's a little different, but you might need to accept that 50% of your port is in the trade and keep a tighter stop based on that and really make sure you're buying at strong key levels. That way your stop would be real close to the current price. So I think generally the mindset behind trading a small portfolio is do your best to be getting the highest quality entries possible. So that means entering at levels where you have strong technical support close below, and also looking for stocks and contracts with, a little bit of room, right? You got a little bit of time here. And as a new trader, generally it's common to be a bit more emotional. And if you have contracts with more time, those contracts are going to move around a bit slower, generally going to be less volatile, which is just going to help you out. So Apple, most people wouldn't think that it's a great stock to trade with a small port, but it's excellent, right? Generally reasonable. Things that are not good to trade, though, for a small port, unless you're very comfortable trading weeklies and pretty comfortable with losing it all. NVIDIA, right? Really very expensive, right? Very expensive. SPX, very expensive and very volatile, right? If you're trading names like this, you have to be very prepared for a significant amount of volatility, number one, and the amount of risk that you're putting up here, right? These contracts move quick and they'll take your money just as fast, if not faster, than they give it to you. So you got to be real cautious trading names that are especially volatile and especially expensive. Netflix, a real expensive one. You should probably generally stay away from that, right? Google is probably a bit more reasonable, a bit on the cheaper side, right? Even Google weeklies at the money. I guess probably I shouldn't encourage that. But next week, Google's, you can get some 155s for 300. It's not too bad. Probably a little bit more on the expensive side. But that's the big idea. So that's kind of my small port philosophy there. Yeah, Norvin, I heard that River told you that. River, he felt actually pretty bad about that. And yeah, he felt pretty bad. But I mean, Norvin, it's just like that. It's just pure luck that happened, right? That whole SMCI move, this one was all based on them just releasing guidance early out of nowhere. So you can just never know. It's just definitely unfortunate that you missed that, Ripper, but nobody, I mean, some people knew that was coming, but yeah, what can you do, man? Any other questions before we call it for the evening? How's everybody feeling about these ideas? Are these, is this checklist, rules checklist and setup checklist, things that people see themselves implementing in their trading? Yeah, we could check this weekly. I'll check some of the charts that you guys were asking for because we're a little early. This weekly. I actually like Disney a lot. Now that I think about it, yeah, Disney's looking pretty good here. This 94.50 level is important, and it's clearing above it. Nice breakout last week. A little bit messy here though, but somehow was able to reclaim that break higher. Honestly, it looks pretty good for more. I think it's sitting right on top of the moving averages too, a little bit above. Double inside day as well. The, currently been a little messy. A little bit messy. Really, you want to see a hold above this 94. This zone really is kind of the place that you need to see a hold above. So 94.75, I'd be looking to see that higher as soon as tomorrow. I like Disney. I think it looks pretty good long. Nvidia, yeah, Nvidia is one that, I mean, you can't really be short on it, but it's so difficult to be long for any more than a day trade. I mean, I mean, it's one that I sent in my monthly review last month that very clearly this was looking for higher. And I think these were the levels I went into the year with. So 570 and above that, I don't actually have anything right now. It very obviously wants higher. Is it something that I'm going to try and trade right now? Not really. I'm probably gonna probably would kind of stay away. But I mean, yeah, it just like that 500 level, you got to be paying attention to the 600 level. It's going to be important. So watch that 600 level. It's going to be very important. As long as we stay above that 600, you got to be looking long. Below that 600, you can look short, but you got to remember this thing's in one of the strongest uptrends in the entire market right now, semis as a whole. So shorting this is always going to be difficult until we see that trend reverse. But 600 is the level to care about, really. I mean, long and off 600, you try and short it below. But yeah, I'd be long at 600, certainly. So no doubt about that. And I'll even mark that level off on the chart here just so I have it going into tomorrow. Get that 600 on the dot. Yeah, I mean, you got to be watching that 600. Plain and simple. Can you go long on Tesla? Yeah, Tesla's a difficult one. Conventional wisdom would tell you that Tesla looks pretty terrible here. It's breaking the weekly trend, a massive power earnings gap lower, below the prior swing lows. That said, I personally feel like sentiment is pretty bad on Tesla right now. So in terms of like long-term buys, I wouldn't say it's a terrible place to start considering purchases of maybe shares. But as for an options trade, it's difficult to be long right now unless you're making a day trade personally. Like I could easily see this one bouncing pretty significantly, maybe as soon as tomorrow or early next week, just because it's Tesla and people buy this up pretty easily. But in terms of a longer term options position, I would stay away personally. That's what I would do. I'm not saying you have to do that. Maybe until we get closer to this 160 area is where I might visit the idea of an options trade. But for now, I mean, I don't think it's a horrible time to accumulate some shares. I actually got 15 shares before the report just to try it out. And obviously it didn't work out. So yeah, Josh, I think you and I talked about Tesla, where it doesn't usually do anything exciting. My average is somewhere in the 200s. I really just bought it a little bit before earnings, so it's like the 211 area. So I'm down, 10-ish%. But I kind of knew, yeah, I mean, I'm holding it, just shares, and it's not something that I really am too concerned about. I kind of just bought it just to see. I thought sentiment was pretty bad into earnings, so I figured I'd just try a buy, but yeah, didn't work out. But I'm down 10%, something like that on a small position. So not really would I hold even if it goes to 160. And to be honest, I'd probably get out of there if we break these lows, just because I'm not married to the position and I really wanted to try it just to see if we get a bounce through earnings. And it was kind of more of a gamble than anything. And I don't want to just sit around and hold on to it. So really we got to hold above this 180 spot. If we get a daily or weekly close below 180, I'll probably get out of there, just because I think capital would be better used elsewhere. Not necessarily because I think that it's going to continue lower as much as I just think the money would be better allocated in other places. This, yeah, wasn't really the best buy in terms of a technical perspective. It was really mainly a buy on just the sentiment into earnings. So I thought sentiment was pretty poor, but it turns out it was justified, which is fine. I mean, I can't say I'm very surprised, but I also couldn't say that I'd be very surprised if it ripped 10%. Is 160 really possible? Yeah, I mean, it's certainly possible. I'll say it was down 12% today, so people that are just getting bearish now, I think are pretty ridiculous. It's very easy to be bearish after a 12% down day, and it's a lot harder to do the contrary. In terms of what this weekly chart looks like, though, I would say that 160 seems like a logical place for this chart to visit. But it's also Tesla, right? This is one that could get bought up as soon as next week, and that also wouldn't surprise me. But in terms of an options trade, there's not much constructive for something in the longer term for me. But as shares get cheaper, it's always generally not a bad idea to be buying things when they go on sale if you like the company. I think the real problem coming out of Tesla's earnings report is they guided. I don't believe they had any guidance for fiscal year 24. And they also warned of a sales slowdown, which, that's never a good sign. And they also had, I believe, revenues dropped quarter over quarter. So I don't think that's generally a great sign. I didn't read the report myself, though, to be honest. So I actually can't really validate all these claims. I just kind of saw some snippets. But yeah, I mean, Tesla, it's at a place where I really wouldn't trade it for more than a day trade. I really wouldn't be swing trading this. Right now, this chart's a mess. And I mean, in terms of, from a technical analysis perspective, it looks like it wants lower. I mean, this is the biggest gap down it's had on the highest volume it's had in months. So general wisdom is going to tell you that this chart wants lower. That said, I mean, it did a similar thing the last report and ended up bouncing and recovering the entire move lower. So you can't rule anything out with Tesla. It really just the amount of people that just are so attached to it, I feel like makes this stock behave more interesting than ever. But I mean, it's been a loser this past year, obviously, right? It's underperformed the rest of the market by a long shot. But I'm in shares. I mean, I think the chart looks terrible for higher. I don't think this looks like a great buy for an options trade, but I'm in shares. So take that with what you will. So all stocks are at all-time highs now. Tesla's the only one at lows. If all of the big tech starts to fall, would Tesla fall even more? That would be what conventional wisdom would tell you. If the rest of the market begins to show weakness, generally you should expect Tesla to continue its weakness as well. That said, Tesla's a little bit of an anomaly, I would say, in terms of conventional market principles. It kind of doesn't really do what most other things would do in a similar situation. So Tesla's just always a funky one to trade, plain and simple. But that is the correct assumption. Yeah, Tesla is definitely most people's biggest loser. Tesla, I would say, are what, at least over the past couple of years, I would say we've seen the most people lose money on Tesla just because of how volatile it is. But yeah, it's yeah, something that I'm not really jumping out of the seat for. Apple, interesting one here. I would say generally it looks reasonably constructive. I'll say that this selling volume over the past 2 days is slightly concerning. I wouldn't be surprised to see a retest of the 191, 190 area. But overall, I think Apple looks generally fine. It's lagging the rest of the market, which I think is notable. Qs are at highs. Google is at all-time highs. Microsoft is at all-time highs. NVIDIA is at all-time highs. Apple is one of the only big techs that's not. And Amazon, I think, as well, isn't at all-time highs, which also looks probably better right now. Yeah, so Amazon's not at all-time highs. I think Amazon looks a lot more constructive, actually, into tomorrow. I think this looks pretty good. And what else? Meta, I think, maybe is at all-time highs now. So Apple certainly lagging the rest of the market. But that said, I mean, it's definitely the bellwether of the market as well. It's the place everybody runs to when they're scared. But showing a bit of weakness in the short term, wouldn't be very surprised to see a intermediate pullback back down to the 190s before another leg higher. So not something, this isn't my favorite setup. I actually like Amazon for tomorrow a lot more. This looks pretty set up for higher, I think. But yeah, we'll see. Also probably just starting to run into some resistance too. It's getting there. It's got room to like 160-ish, but it's getting to the point where it's going to have some trouble. All right, Norman, I will check VRT and RMBS, and then we're done for the night. VRT, I think I told you that I really like this one. Yeah, look at that, Norman. Look what I gave you, man. I gave you the entry long. This was last week. That's where I said 50, and I don't think you hit it, but I even dated it because I knew we'd come back to this. I mean, I'll get you some more levels here. Let's see. Let's run some fibs here. How do I want to do it? Probably this to start. Hmm. Okay. Mark this guy out. The hourly. Yeah, I like this one. I'd probably get long over here now. We're gonna date this one so we can look back at this. It's a rough level here, but let's see. Yeah, I mean, the daily is a bit of a mess, if I'm being honest. I probably would rather not buy it above that right now. I'd probably rather wait at least for this gap to come back into play. My only concern right now is the volume patterns have kind of changed rather significantly, right? If you'll notice, before we got this sell off, it was all buyers in control. Now we're starting to get some significant sells come through here. So sellers are looking to be a bit more in control. Obviously, not in control of the trend, but I'd probably be looking for a retest. Here, I'll write this down. I'm going to write down everything I say. I'll say 50 to 51. All right, there you go, Norvin. Oops. Gave you the 50. We'll see what happens. All right. Last one. Last chart of the night. RMBS. I don't know, man. Let's see. What do we do with this? All the levels I gave you kind of got blown through. We don't have any more levels anymore. There you go, Norman. There's your level, 76.73. That's pretty much above the swing high. So long it above there or back down to the 70. That's what you got to do. Long it at the 71 or above that swing high. Everything's at all-time highs. What is going to start buying shares now? Yeah, so it's important to note that now is not the best time to be buying shares in a couple different things, right? You want to wait for some constructive pullbacks. I'll say there's been plenty of time to buy shares in a lot of different names here at these highs. So you're going to want to, especially as a share buyer, you want to be patient. There's going to be better entries always, or at least more constructive entries. Like price might go higher, but then come back down to a more constructive area where it makes sense to purchase shares. That said, I mean, yeah, Norvin's got a decent point. Small caps still are providing some kind of value entries in this area overall. If you're feeling frisky, you got China down here near multi-week lows, which actually has gotten a nice move off of them so far. Wow, I'm kind of pissed I didn't buy. Wow. I was waiting for this level too, 20.21. Wow, I should have had the limit there. That's unfortunate. Actually, that I'm kind of just sad I saw that. Wow. Yeah, China does look okay. AMC, yeah, this one's been a great one to buy, huh? It's been going real well ever since you bought it at 726. No, it is not something that I would buy. I don't even care if it went to 50 from here out. That's not worth it for me. Um, yeah, Garvey, sure. But yeah, generally speaking, in terms of buying shares at all-time highs, you want to just look for pullbacks. That's really it. And buying shares in general, you don't want to be buying at the highs. You got to be looking for pullbacks to support. That's it. Whether that's moving averages, whether that's constructive daily support, whatever the case might be. Cool. Yeah, let's look at the first couple slides real quick. If you want to take some screenshots, we also, Garvey, if you're curious, I gave, what's it called? I talked about the first slides in the last lecture. So it actually I said no for AMC. It's not something that I buy. I have no reason to buy that personally. There's no fundamental reason or technical reason for me to buy AMC. Could it, 10x from where it currently trading? I don't know, probably, but it's not something I want to get involved in, and it hasn't been. To be fair, I mean, it's not like I'm just saying I don't want to buy now. It's not something I've touched for 2 years. I've never wanted to buy, and I still don't. So, you do you, but not something I want to get involved in. By SoFi, yeah, I mean MMA probably loves it. I can tell you if it makes sense from a chart perspective. Um, eh, I don't know. It looks like it wants a bit lower probably for now. I'd look probably around the $7 area personally, or above eights, but yeah, it doesn't look great here. If you're shopping for small caps, though, I do like Shopify a bit better. Yeah, say, wow, that went on a quick ripper, didn't it? That was fun for a bit for Dave Portnoy. I think the guy that bought that, that was pretty funny. He's been posting some funny stuff about that. I've been enjoying that, but I did not buy Save. Yeah, so Garvey, I can show you these slides, but I'll be honest with you. The last lecture I gave on it will definitely do them much more justice than I could do right now. So I'll probably just send you the link right now. We also had flips in here for that, and I think that lecture was really good. So I'll post the link to that in the chat there, Garvey. And yeah, hopefully, I think that'll probably serve you better than me kind of just talking through the slides right now, just because they kind of had my full attention in the last lecture where they, at this point, they probably really won't, to be honest. Is that okay, Garvey? Awesome. And feel free to reach out and let me know if you have any questions. Cool. All right, everybody. Well, I appreciate all your time tonight. I'm going to call it for here. I'll see you guys all in the lecture next week. As always, thank you guys for your time this evening. These lectures are nothing without you all attending. They'd be real boring if I was sitting here alone talking to myself. So I appreciate you guys all being here. And I'll see you guys all in the next one. Thank you so much. If you guys have any comments, questions, feedback on the lecture, feel free to let me know. Oh, Helmy, I didn't even see you were in here. Hope you're having a good morning, Helmy. Hope you're having a good morning. All right. See you guys all in the next one. Adios.